appreciate you guys showing up, man. Today's lesson is about market structure. And I want to go ahead and start with, I don't know if you guys are familiar with this particular setup, but this is all over the place with Forex and basically teaching about market structure and how the market moves, okay? As you can see down here, by looking at SPX 500, market moves in pretty much ups and downs all the way through, okay? In the Forex market, correct term for these ups and downs and these dips and these highs and lows and valleys, they're pretty much just higher highs and higher lows. This is pretty much how the market moves. This is the desired type of direction or pattern that we like to see the market move and continue in. So when we're looking at something like this, we're going to go ahead and we're going to type this out just so you guys can see. So your higher highs are going to be represented by the HH, and I'm going to put equal, not plus sign, man, equals higher highs, HL equals higher lows. Your LH equals lower highs, and your LLs equal lower lows, okay? Now keep in mind, guys, as we're going through this, you always want to remember that as the market moves, as you've seen in our previous Zooms and the lessons that we've done, our live markup sessions that we have every day, you can see that we like to start from the top down. So we're doing a top-down analysis on every pair. If we haven't, or if we've already marked it up, like in a previous session and that markup is still there, then yeah, we'll go off of what we see or what's currently going on, keep that markup there. But for the most part, if we're starting on a fresh pair that we haven't looked at from the beginning of the week on our weekend markups, then we'll start from a top-down analysis. We'll either start from the weekly or the daily, and then drop down to the 4 hour, the 1 hour, and then the 15 and the 5, looking for possible entries and stuff like that. But you always want to start out from your higher time frames. So looking at this, you have to remember, when the market moves like this, it's going to play out longer when it's on the higher time frame, okay? These moves and these higher highs and higher lows, they're going to play out longer on higher time frames. So let's just say, for instance, you're starting from down here, okay? And let's just mark these out for now. You have your higher highs that we're starting from, okay? Let me go back up. It's up here, don't worry about it. I didn't lose it, it's right here. So this is a higher high. And get away from here. That's your higher high right here. And you have another one right here, okay? These are gonna be your higher lows. But as the market goes up and down, when it creates its peaks and valleys, it's creating your higher highs and higher lows. And that's when it's going on an uptrend, all right? And then you have your higher low here. Now this is going up, okay? So as you're going up, oh snap, it hit. I got it on my other screen, we're all good. That's not gonna detract from the lesson. But anyway, as we're going up, you have your higher high, then you have your higher low, okay? After your higher low is presented and then it moves itself up, then you're creating a higher high. And you're waiting for this higher low to form, okay? In between time, as far as entries go, after this higher low actually this higher high is created, and you come down to higher low, once you break through here, the method that we always teach, which is break and retest, this higher low is busting through the zone right now, and it's going above this higher high to create another higher high, okay? After we create this other higher high and price starts stalling out up here, then it's gonna come back to do what? Retest the previous high to create the higher low, and it's gonna retest the zone that it just broke, okay? So as you're going up, and this is how the market moves. This is ideally how you want to see the market move. Doesn't move this smoothly as I have it presented here 100% of the time. But that's our job as traders. We need to be able to identify when the market is in an uptrend, when it's in a downtrend, or when it's in consolidation. So this is a perfect example, and this example is out there. I don't know how many times I've seen this, so it's pretty common to teach. But as soon as you come down and your higher high coming down to your higher low, you're retesting this zone right here in the market. And I'll show you guys. I think I'm gonna pull up one of these charts and show you guys some pretty solid examples of how the market moves in this way. Okay. So as we're coming up, we have this higher low. Okay. Since we already hit our higher high, we know price rejected from here. We want to mark that out as well. Okay. Just to have that for future reference. So when we come up, here's our higher high. The next one, price is rejection off of there, comes down, here's your other higher low. You drag that across, and it's pretty much a break and a retest. Okay. So when we've been on our previous sessions and we've taught you guys that at some point, the most opportune time to enter a trade is off of a break and retest. After you get that retest, then that's the safest possible trade that you can take, especially on an uptrend. Because if price is coming up and you feel like it's going to break, you're not really sure. Or if you're a breakout trader and you trade breakouts, then yeah, something like this, you'd have to be watching it, because you can't just place a trade like when price is breaking through a zone and just set it and forget it, because you don't know how high it's going to go unless you have a previous zone that you're aiming for. But any smart trader would tell you that trading a break and just setting a TP and a stop loss, it's not going to work. Like, let's just say that you're going for something like this, and I keep resetting my chart and it keeps doing that. Let's say you're doing something like this. Okay, you know price is coming up, it's going to break your zone right here. You already know, you're 100% sure. Okay, you do this, and then you set your TP all the way up here. All right, and then you go back, you do whatever, set your TP, set your stop loss, and go about your day. Like, oh man, I'm in the money. I'm not even gonna check. I'm so 100% sure that this is gonna hit my TP, but your TP's all the way up here, and price is stalling out after this breakout of this zone. Price stalls out and starts creating its own zone, or it's reacting off of a previous zone that you neglected to identify, and then price just reverses. Okay, that's why we always say a break and a retest is most ideal, and to not go for like lofty goals like this. But depending on what time frame you're actually trading on, and depending on your trading plan. Okay, if you know a breakout is coming, then something like 10, maybe 20 pips, or maybe even if you have the time to sit there and watch your trade play out and you can kind of gauge where it's stalling out, then yes, something like trading a breakout like this, that's perfectly fine. As long as you know that at some point it's going to come back and retest this. Okay. Doesn't happen 100% of the time, but if you're going to take a trade off of a breakout or a zone, the safest possible place to take that trade is when it comes back to retest that zone. Okay. So we have our lower low coming off of this zone, coming back up. All right. Our price didn't quite make it past this previous higher high. And what did price do? It created a higher low. Okay. Even though price created a higher low, I mean, what was that? That's a lower high. My bad. Let me get rid of that. That's a lower high. Do that right there. That's a lower high. So even though price created a lower high, what we're expecting is for price to then create a lower low. But in order for price to create a lower low, we have to go past this zone right here. We know this zone is right here. So as far as going for a sell from this point, it would be an aggressive scalp, okay? This isn't something that you would hold from a point like this because one, just looking at this, even if there were previous levels back here in the past, like, yeah, that's cool to take a sell off of here, but you know that once you approach this zone, you need to be watching price because it can very well reverse on you and continue its uptrend, okay? So a sell off of here, that'd be something like a scalp, or you can set your TP like maybe a little bit above this zone, just in case price doesn't quite reach it and then ends up reversing on you and you're in a negative. Okay. So as you can see in my previous session, I talked about patterns and everything. It's a W pattern right here. Happens all the time in the market. We've seen it. You've seen this pointed out. Very important for you guys to go ahead and utilize those cheat sheets that we threw in the Telegram and in Discord. We want you guys to be able to print those out. It's highly recommended for you to do that for quick reference. So when you do see something arise in the market, then you can just quickly look at it like, oh, that's a W pattern. You know what I'm saying? Or, oh, that's a flag, or that's a rising or falling wedge, or anything like that. You'll be able to identify that pattern. So price came up, created this lower high because this peak right here is lower than this peak. So this is a lower high, okay? So when you come, hit TP1, who that? Yeah. What hit TP1, Omar? What's that, SPX? I think he's talking about SPX. Hope you can just go down here and see. Yep. Bang. That's why I put see how I set my alert there? And it's disappeared now, it went down. Yep. Here we go. Kind of should have held from up here if I knew it was going to come back here and bounce off to 61, but it's okay. I already got a pretty good amount from here. But that's the thing, guys. Don't be greedy. Don't be greedy in here. So coming back here, after price created this lower high, this right here is kind of like the same higher low as this one. So we can say, because it didn't create, okay, thanks. Yeah, I'm not doing that. Thank you. We'll put same higher low. Because since price came down here and bounced off the zone once again to create this double bottom, okay, it didn't create a lower low coming from this lower high. It's pretty much the same as this higher low, all right? So after this, price decides to go back up. And what did price do up here? It created the same SME, nope, higher high. So this same higher high is somewhat equal to this higher high, okay? And you can gauge it. And just looking at it like this right now, I mean, when you look at your candlesticks and you zoom out and your candlesticks start to look like a little bit like lines and stuff, then you can pretty much gauge how your patterns are looking, okay? Yep, yes, sir. TP1. Hope you guys got in on that for real, man. That's a nice drop. That's what we've been talking about on the yen session. That was a big move for that and the previous session. So, but yeah. So we have our same high right here. Same higher high. Coming down here, price created a lower high or lower low right here. This would be lower low because it's lower than this lower high, okay? So we can classify this one as a lower low. And I'm just gonna do this real quick. No, put him right there. Do this real quick. Just put that there just for now, because we already know what's coming, okay? We already know what's coming. If you guys haven't fully grasped everything, like now, hopefully you guys been paying attention. I know maybe sometimes it sounds a little monotone or whatever, but I'm just kind of in my groove. So we got a lower low, and when price came back up, we have our lower high because it's lower than this higher high, even though it's the same as this one. When price came down and closed above this lower high, this one is still classified as a lower high, or maybe even an equal lower high of some sorts, because it is somewhat the same as this one, okay? So when you look back and you saw that this peaked out at this lower high or at this peak right here, then you can pretty much gauge and pretty much put it in your charts that, hey, this could be a significant area that I need to mark. And if you did mark it, then when you come over here and then price is coming back to retest this, you know it's from when this previous lower high was created, okay? So if we have a break in structure to the downside and we have a break of this zone and price just decided to come back up and reverse from here, what is that? That is a retest of this zone, okay? The retest of that zone at the same time is creating a lower high, okay? So as we have our lower high and we are rejecting off of the zone, then price comes back down here, creates a lower low. From your lower low, if you look back and you can drag this from all this traffic back here, like Marcus says, your past will tell you the future. It says that all the time. Drag that back here, boom. Now you have your area where your lower low is created, okay? And you get a bounce off of there. And again, the structure that you just broke came back to retest, okay? After your lower high was created, then price comes back and breaks down through here again. This right here, guys, is one of the most basic examples of how to convey market structure and how it moves. I've seen this played out plenty of times, especially in the real market. And something like this is very beneficial to you guys. What I like to do, and when I was first starting out, was just going through all my charts and just marking up all my higher highs and higher lows, etc., and just really seeing how the market moves. something like this, guys, is pretty much bare bones. You can see when you incorporate this type of structure and you know how market structure moves, then you can better be able to place your trades with confidence. Okay. And like I said before, it's not 100%. It's not going to move like this all of the time. It's our job to be able to identify when the market is either in an uptrend, in a downtrend, or when it's in some sort of consolidation and we're anticipating a reversal. That's our job. The market is going to tell us what to do, but it's not going to tell us when it's doing it. We have to identify that for ourselves. Okay. Looking at a chart, where do you start the initial point? I'll get it. I'm about to transition to a chart right quick, Daniel, and I'll show you guys that. You can pretty much start it from wherever you want. But I'll show you in a minute. But as I said before, guys, the longer these moves or the higher the time frame that you can identify these moves, the longer that move is going to play out, which is going to result in you making more money and you being able to stay in trades for a longer time. Because something like this on the 15-minute, I mean, yeah, you're going to be jumping in and out of it. You're not going to be able to hold it as long as you would, like if you were able to adapt some sort of like swing trader mindset or more of a long or an advanced intraday type mindset. You identify, like say you identify this higher high and it broke through structure. You know that's going to come back and retest this zone that it just broke. And after it pretty much retests this zone and creates a higher low, and you're getting really good price action from here, that's telling you that it wants to go back up and finish creating that higher low, then you could take it up and just let it play out, especially if you're on like the daily time frame or something. You can let this whole move play out all week on a daily time frame. Okay? And just monitor it on the way up. And whenever it starts to stall out, then you know to either get out, or the market is either reversing, or you can pretty much gauge where it wants to keep going, or whether it wants to keep going or whether it wants to reverse. So this structure right here, man, I'm telling you guys right now, you need to be able to identify when the market is moving in that type of way. So, okay, cool. I think my second alarm got hit too. You don't want to wait. It's fine. So I'm gonna move on to GU right now, and GU just broke that little. I just erased this chart. I had it marked up and everything, but I wanted to use GU for the lesson today. But yeah, Marcus already threw in the chart or in the Telegram that that GU was breaking down as well. So looking at GU, you stretch this out, or if you go to higher, lower time frames, whatever time frame you're on, from the 4-hour on up, these moves are going to play out longer the higher the time frame. Okay, even though everything looks the same, you got to remember that each of these candles on each of these corresponding time frames, that candle is how long that that time frame is going to play out. Since we're on a 12-hour, this like something like this is a 12-hour candle. This is a 12-hour candle. All of these candles represent 12 hours out of the day. So 2 of these is like 1 day. Okay. So you got to remember that. Always pay attention to what time frame you're on. So if we're dropping down to the 4-hour, when we talk about market structure, okay, I'm going to try to find a good spot. We can see, and somebody asked, I think it was Daniel, where you start identifying your higher highs and higher lows. So you pretty much start at wherever you see one, okay? Pretty much wherever. This up here, I mean, you can look at it and see that these 2 points are same higher highs, okay? Because they both failed, or this second one failed to go any higher or any lower than this previous higher high, okay? So as we're looking through this, let me stretch this out a little bit. As the market is moving, we don't have to, like, I'm just gonna shorten it, like each little, on the way up, I'm just gonna shorten the zones and the support and resistance. Then we'll be able to stretch it out later, just so you can see that the zones and everything that are created in the past, it will definitely have a reaction. Price will have a reaction to that in the future if it's valid, okay? So right here, we can identify this as some sort of little consolidation, or like what's the name was saying in his box method, how AJ likes to talk about his box method. You have your box here, and you have your expansion and your profit wave, okay? So we can even start from here. And like I said before, our job as traders is to be able to identify when the market is either in an uptrend, a downtrend, or consolidation, okay? Because this right here, you don't want to be stuck in it, especially on lower time frames, okay? If you can spot consolidation, and if you like to trade consolidation, just know that your trades aren't going to be held for that long. You have to know when you are inside consolidation, because you'll be expecting to make a long move somewhere. Like you can see this long wick and these, and then you see this candle right here, expecting it to keep going up, and price just keeps coming back down, and it's not breaking out of this box. And then eventually it goes this way. And by the time you get down here, you get all frustrated, like, oh man, like I look back at it and that was consolidation. Like you have to be able to realize somewhat early on. Well, not, you know what? You don't have to recognize it early on. You have to be able to spot it. Okay. You have to be able to spot when it's in consolidation. So coming out of this consolidation, we have this level right here. And we can start off our higher high and higher low uptrend from here. If you guys can see, starting from here, we had our morning star formation, this candlestick formation that I went over on Tuesday. We have that for more up, okay? Price came up, and price stalled out up here, started coming down. After this stall out, we can go ahead and mark that out. And it's not that far away that price, came up and retested off of there. But even off of this down, you could have looked back, okay, and marked this out. You could have marked this area out to try to predict how far price would retrace from here, okay? So the lesson from Tuesday and this lesson, they go together. And I was telling somebody I was glad that you guys picked these two lessons for this week, because they go hand in hand together. Candlestick formations, chart patterns, and market structure, they're pretty much the basis, and they're king when it comes to trading. The most successful traders are naked traders, and they know how to read the price. They know what price is telling them. They're not solely basing everything off indicators. They know how to read the charts. They know how to read price. Okay. So from here, somewhat incorporating the lesson from Tuesday, like I said, morning star formation right here. And coming up, we have what? We have our flag formation as well coming down. We got our bullish flag. We know that our bullish flag at some point is going to break back to the upside. Okay. So after you have your bullish impulse coming through here, then you have your correction. You got your impulse, correction, which creates your bullish flag. Then you have your continuation to the upside. Okay. So price moves past your peak, which is what? Your higher high. Okay. Put our higher high in here. And your higher high is right there. Price comes down, creates your higher low right there. Okay. So now you have your higher low. Now that price has broken out of your flag, broken your higher high, and continued to the upside, now it's retesting that higher high. Okay. Now that you've retested it, your other high that it created after here, because your higher high, higher low, come up, higher high, or you can go back to here, but I do want to include this. This is somewhat of a consolidation, but you do have your retest over here. And if you don't consider this higher high, I kind of do, because price stalled out after here, especially after coming and making this bullish run off of this bullish engulfing candle. We can consider this one your higher high. And then it comes back down and you got your higher low. You gotta make another one of those. We'll do that right now. And your higher low. Okay. Got your higher high, higher low, higher high, higher low. After this higher low, then you pretty much have your swing after this. Okay. And all of this is stemming from your reversal pattern right here. And if you look even further back, since we have been on an uptrend, you can see that coming off of this W pattern back here, we're harking back to the lesson on Tuesday, our W pattern back here had this big swing up. We had this consolidation, right? Which we can also consider a flag if we go off of our retest down here, which also lines up with these levels back here. Okay. We had a little bit of stalling out around here, came up, we tested back down, boom. Okay. So now we're in our steady staircase uptrend that we were talking about. All right. So we got our higher high, higher low. And then we have this big move up here. I'm not going to include all of these. I can, but I mean, they're just slight little pullbacks. Anything significant, I would really mark out. But something like this is a big swing, okay? We can take it from here and have it like this, but all of this would also be considered some sort of consolidation. So, like I said, we have to identify when we are in that. But we know after this consolidation, we break to the upside, then we're still expecting another higher high to be created, which happened up here, okay? So we can go ahead and mark that out, our higher high, and we're good, okay? So now we have our higher high. I'm gonna go ahead and take this off. After this higher high, we have our price action up in here, which is the evening star, okay? We have our evening star, and we have our continuation bearish candle coming down. Price creates a lower low on the way down, okay? Go ahead and mark that out. Give me my T, man. Cool, thank you. Lower low. We have our lower low right here. All right. And pretty much after this lower low, we have a lower high. Since it was lower than this higher high up here, we have our lower high right here. No, I didn't do that. Better act right. We got a lower high right here, okay? After this lower high, where are we expecting? We're expecting a lower low to present itself somewhere, okay? So we know that this reversal pattern is going to continue at some point, all right? So even though we have these, this is the highest lower low. And here we have somewhat even more consolidation, all right? So being able to identify this consolidation is key when you're learning about price action and candlesticks and market structure. You have to realize when you're in some sort of consolidation. And like I said, you can trade consolidation all you want. That's fine. I mean, as long as you know your highs and lows of it and when to get in, when to get out, and you're not going to be holding it for a while, then that's fine. People make hella money off of consolidation. So after this lower high, we're expecting price to create another lower low because we're expecting that we have a reversal in price, especially after this peak up here. We have a reversal pattern. We have a continuation pattern. We've had price come down below this previous consolidation. We've been wicking back and forth down here. At the same time, price has struggled to break any higher to create any type of, higher high after this or anything like that. So after the top of this consolidation, we start getting a steady move down, okay? After this steady move down, we end up creating our lower low, all right? And this lower low can be identified because we've passed this previous lower low, we passed these previous higher lows, and this one as well. We broke this zone, come up in here, and now if we were to expect price to go any lower, then we would expect price to come back, retest this, and come down. But it didn't, okay? And that's why we preach safety when it comes to entering your trades, all right? Something like this, somebody could have gotten faked out on the downside. They might have seen that, GU was pretty much on a downtrend. Maybe they didn't see this this zone right here, and they just saw this big old candle coming down, and they got in down here, and they set it, and they leave. Or they set their TP and their stop loss, and they go about the day. Their stop loss would have been hit, especially if they're going for a sell. Okay? That's why we always preach waiting for a break and a retest. Even though this could have been classified as a retest, you still want some more bearish confirmation via other bearish candles and something significant. Not these little candles right here. Like, no, you need something significant to tell you that the market wants to keep going down. Okay. So from here, we can see another reversal coming on. Now, since we do have a market reversal, even though these highs are lower than this other higher high, these would still be classified as higher highs and higher lows because these are being indicated as a market reversal, okay, back to the upside. So if you're on an uptrend, you're not going to have lower highs and lower lows on an uptrend. You're going to have higher highs and higher lows. So as we go through here, price created a lower low, but it came up and created a lower high. Or I just said what it was, and I'll say it again. Price created a higher high, okay? So we can go ahead and mark that out. There's your higher high right here. Now, since price just broke this structure that these higher lows and this other higher high reacted to, since it just broke that, it's got to come back and retest it. Okay. After retest it, it creates a higher low. You got your higher high and your higher low. Okay. You have another higher high right here. It's a little higher than the previous one, but still higher. All right. And you're coming back, retesting this again. So this would be classified as an equal higher low because it didn't get past this zone. So if we're having equal higher lows, then that's telling us that price is failing to break past the low. Okay, it's failing to break past this zone that's had several reactions to it in the past. So since it's failing that, and price is having higher highs on the opposite side of that, all right, if it comes up and this first point is high, okay, comes back down, higher low, boom, we're coming off of this zone. Now it goes up again, boom, this higher high is higher than this one, okay, but it comes back again, boom, equal higher low. That means the next time, chances are that the market's going to go higher than this previous higher high because each time it's struggling to go higher, but it's still pulling back. So the third time, boom, we got our higher high. Okay, and then price just takes off from there. Same thing, looking at this back here on its way up. So you got your, let me do this. You got price coming up from here, got your equal higher low, got your higher high right here, bang. And now you could do something like this, but looking at it, it's just consolidation, like a slight consolidation. You can't really, unless you stretch it out. Yeah, this is a slight consolidation up in here. I wouldn't even bother with higher highs and higher lows right here. So I'm gonna get rid of these. And I mean, who knows? Other people may see something else, but it's definitely a higher high. This created a higher high. At the same time, this whole area right here is consolidation, okay? And that's why I say we have to be able to identify when we're in some sort of consolidation because we have this coming into it, failed to break it, came down, failed to break down here. Now we're on a slight uptrend here and price is gaining some momentum and it finally breaks out to the upside of that consolidation. Now price creates an equal higher high to the previous higher high. That was all the way back here. And we can see that, okay, all right, okay, cool, yeah. Get out of here, okay. And we can see that this one is equal to this. We can just eye it. I mean, that's pretty obvious. You know, I shouldn't have to mark that out. But at the same time, like we're saying, you have your equal higher high. You have your consolidation here, consolidation here, consolidation here. So we have to be able to identify in the market when we're on an uptrend, when we're coming up, when we're going sideways like this on both instances. Even if we are going sideways, overall, coming from this equal lower low down here, we're still on an uptrend, okay? We just hit a point of consolidation. And it's somewhat, I would say, looking at something like this is like bullish consolidation, okay? Because like I said, somebody else can very well just look at this and be like, oh, well, this is a higher high right here. And this a higher low. And then boom, like, yeah, but still, I mean, you can look at it both ways. either in consolidation, you got your higher high right here, or even your higher low right there. And I don't like how that does that. I might fix that. But yeah, then over here, since you have your equal higher high or your higher high, you're forming your big M pattern. And this is, I know this is more visible on the 12-hour. Let me just find out where I was. Hopefully I didn't just lose everything. Yeah, there we go. More visible on the 12-hour. Despite all this, you can still clearly see this M playing out, which again harkens back to the lesson on Tuesday about chart patterns and candlestick patterns. There's your M right here. So, and that's why I say I like that both of these topics are during the same week, because they play very well into each other. And like I said before, we like to trade the right legs of M patterns, W patterns, which is the opposite of the M on the coming up, like something. Let me see. I don't know if there's no. Something like this. Something like this. I'd like to trade this right here. If you can see, this is W on its way up. Our entry, once seeing this, would be around here, waiting for this candle to close. An aggressive entry would be this right here, the starting of this bullish candle. And then, a safe entry would be once this candle finishes. Okay. But from here, like I said, we can see after the right leg of our M, after we're at the peak of this right shoulder, then we can go ahead and take it down from there. And what's price going to do? Price is going to create its lower highs and its lower lows. Give me a second, guys. All right, sorry about that, guys. Your roommate inconsiderate self. Anyway, so coming on its way down, man. We have, like I said, we have our lower lows and our lower highs coming down. And I'm pretty sure you guys can see. Hopefully I've explained it in, I guess, the simplest way I can about how the market moves. This is pretty much it, guys. Just like the other illustration that I had up, it moves just like that throughout. It's our job to be able to identify when the market is in those phases, okay? Other phases that the market does present itself and tells us pretty much what it's gonna do. I don't see, I kind of don't see any here. But I wanna say, let me go back to SPX. And that was kind of a perfect example, like the trade that Marcus called today. And we taught this on Tuesday about how the market moves in your impulse, had an impulse on the way down, and then your correction. Right now, the market's correcting itself, and we're waiting on that continued breakdown. We've already broken out of its flag. Now we're waiting to get past these zones and start creating its lower lows and lower highs. Okay. So as far as impulses go, an impulse is just a strong move, either up or down, like either one solid bar, or you can see it happening. I'm sure you've seen it before, where you're looking at price and price just starts shooting down like really fast, or shooting up really fast. That's called an impulse within the market. Okay. After an impulse, usually if there's not an immediate continuation after that impulse candle, then price will start either consolidating or slowly moving in one direction. Okay. So after these big candles, like right here, you can see that price was kind of stalling out, kind of undecided on where it wanted to go. Okay. After an impulse candle, you have to be sure, or you have to be careful. You have to be careful about placing a trade after an impulse candle is created, because that's not the time to get into a trade. You need to be able to wait. Like, you have to wait because you don't know which way it can go, especially during news. During news events, like something like this, something like this could be a news event. This can be a news event. Like, you just don't know what the market's going to do. Once you get those long wicks going on, and if you're actually watching price, like, you can just go down out of the 5 or the 15 minute, and you can pretty much see when news comes out that affects your pair. You can see how fast price is moving. Either way, okay? Yeah, sure, at the time, like, you're looking at it and it's like, oh, I'm definitely not going to get in here, but it looks like it's going down, and then it turns around. It's like, oh, it's going back up. And then you end up not doing anything. Then you look back, like maybe an hour or two later, and you see the candle that formed. You're either relieved or you're pretty upset because you look back like, oh man, that was a big old candle. Like, it was just red. It's like, no, you saw it played out. You know what it was doing. It's the wrong time to enter a trade. So on your impulse, like I said, like what Marcus did today was perfect. He waited until price stalled out, because we saw this like kind of happen. It was on our session this morning. Like, we saw this kind of happen. When I last looked at price, it was all the way up here. Okay. Then I look back about 15 minutes later, and it's halfway down here. And by the time it was done, it was down here. So Marcus called it, boom, called it buy, because he knew that price was going to stall out. It's not going to keep going. Price is going to stall out at some point. Price is going to be done with its impulsive move and start to go in its corrective move. Okay. So this corrective move has played out. In the midst of that correction, we've created some sort of a double top right here. Okay. Now, since we've created our double top, these are equal lower highs right here, because they're lower than this higher high. Okay. So now we have equal lower highs. We have our lower low right here. We're looking for another move down. And this right here could be somewhat of a lower low, but we'll have to see. It's about to close right now, but we do look like we're getting some reactions from here. So as far as the trending portion, this isn't a trending market right now. Okay. This doesn't look anything like GU did. Maybe up in here a little bit, but how GU was when we had something like this is a trending market. Okay. This whole area, we're getting our higher highs, higher lows all throughout. This is trending. Now we're starting to stall out up here, and we're getting our lower highs and our lower lows, lower high, lower low, equal lower low, and then coming back up. Once we get up to here, then we have our impulsive move. Okay. This impulsive move is breaking us out of this slight reversal of this uptrend. Okay. It failed to break any of these equal higher lows, because you gotta remember, this one is a higher high back here. Okay. All three equal higher lows failed to break, get an impulse down, Now, after that impulse, we're going into our correction. Okay. Looking for a continuation right now, but we need this zone to break down, because what did it do? It's having a reaction from these previous levels of market structure, which is just this zone. We get a breakdown of this, then we can go ahead and be a little more safer in placing some sales from this area if we didn't stay in the trade from up here. Okay. So as far as market structure goes, guys, I mean, I hope you got something out of it. I don't want to hold you too long. We went about an hour. I think that was, I think it was all right, man. I think it was okay. But yeah, that's the best way that
I know everybody took value out of this, man. Really appreciate it. Thank you.
Not a problem, man. Not a problem. If you guys have any questions, I'm happy to answer them, man. I'm right here. I'm in my groove. I got my, Marcus was telling me every time I talk or I teach, it sounds like I don't have nothing to drink by me. So I got my drink with me. You know what I'm saying? So I'm ready. I appreciate it, Jordan. I appreciate it, man. Any questions, you guys? Anything you didn't understand? Is there anything that you want me to go over again? I apologize if I went too fast, but yeah, just like Marcus say, he do the same. We do the same thing. We kind of get in our groove and get a little excited, man. But I mean, hopefully, I was able to explain everything to you guys. This won't be like one of the only sessions we have on market structure. This is recorded, so I'll throw it in the Discord and in Telegram group, and it'll be uploaded to YouTube as well. So you guys will have access to it if you need to come back and refer to it. But other than that, I don't, unless you guys have any questions, man, I really don't have anything else for you. We can go over, like, if there's a pair I want to look at that's doing good, I might get him. Is he here? Ooh, I'm gonna get Brent, man, because Brent. I want Brent. I'm gonna get him because he should have been in this UCAD buy that he asked me for this morning, and that thing is where we at. Where's my thing? Okay, cool. Yeah, he should. I'm gonna get him. But other than that, if you guys are good,
hey,
what's up?
Yeah, can you go back to UCAD?
And
all right, I got a question for the class.
Uh-oh.
What's the next move on UCAD right now, based off of everything you just learned? Anybody can turn on their mic and answer.
I'd prefer you to turn your mic, but it's okay.
I mean, if we're going off of the past predicts the future, I mean, I'm predicting at some point it's going to go up.
To the based off the past predicts the future. Yeah. You're on the right mentality, but based off of the past, we're already seeing a lot of rejection, right? John, can you point out the rejection here? And where else? Can you point? Can you get the other three or other two? All right. All that. So, yeah, you can definitely consider that if you're thinking that's a reversal in the market, but just the last thing he was talking about where you had a massive impulse up. So what do you think now, and kind of try and go into a little bit of detail on your thoughts on why I'm giving it, it's going down. It's going to go down, but I need you to answer why I think it's going to go down.
Go ahead, Ethan.
I'm looking at it right now, trying to see why it would go down.
Anybody can answer.
It looked like it retraced. It looked like off of that bullish candle.
It's just a rejection.
Yeah.
Right. So you have a retrace. So we're talking about retracement, right? So we had a bullish. We just had a huge bullish impulse, right? And then
Right.
Sean, can you mark up the flag, please? So you have one indicator here, right? We're seeing a flag. What is this flag? Or what type of flag is it?
This is new to me, or I'd answer, but I don't know.
Sean went over this during the Zoom. So right now we had this bearish impulse, but now the market has to correct itself. And it's already telling you right here that it wants to correct itself by giving you this flag. This type of flag, this upward flag telling you there's going to be a huge sell coming. Now, if you were on the Zoom, now if you guys watch the YouTube, the Zoom that Sean uploaded on YouTube, you have like the two candles right before this. What would you consider this? If you got Zoom.
Are we talking about at the top of the flag?
Can you zoom in, Sean?
Yeah.
So not the current candle that's playing out right now, but the two before it. What would you call that?
Two before that's gosh. I mean, technical term isn't a Harambe style candle.
Just that formation there will be considered a dark cloud.
A dark cloud, okay.
That's a dark cloud. So the market's giving you signs. First, we always know the market has to correct itself, and it usually goes back 50%. And Sean showed that on XPX. So with that being said, when we talk, read this like a book, guys. You have this impulse with the flag. So it's telling you, hey, look, I'm about to go down soon. Pay attention to me. Then it gives you this dark cloud. So from here on out, I'm going to be looking for it to break, retest, and sell. Right off of the trend, the flag that Sean drew up there. Where we're expecting it to go, you're going to look at the past to pick out your TPs on this. So so now that I explained that, where do you think your first TP should be once you enter this trade? Once it breaks and retests, Sean drew up, where do you think your first TP should be? All right. So Sean just marked it up. You guys the past, right? You guys had the right idea, past and predict the future. He just put in a line there where you had resistance off of the support. So that'll be your first TP. And now that you got that, where's the TP going to be?
You said where's the second TP going to be?
Yes, sir.
Probably had the midway point, probably.
Why?
I'm looking at that previous, that long, and I guess we'll call it an open bearish candle. Yeah. That's what one thing that stuck out to me. That's where I was looking at.
Yeah, you'll be looking for your TPs at key levels, at key levels. That's where you're going to be pulling your TPs at. Now, me personally, I always put my TP a little bit above or behind whatever direction I'm trying to I'm in the trade at, but yeah, that's where your TP would be.
Okay.
Okay, I just wanted to everybody kind of get the clear picture there. But all right, thank you, Sean. Appreciate it.
Not a problem, man. Not a problem. I appreciate the help. But yeah, like Marcus said, when you're looking at this and you have this long impulse and then prices moving, the price is either going to move up slowly or it's going to move down slowly. Okay. After that price breaks out of that flag, then what you're going to have is a pretty strong move in either direction, right? Now, since we are at this zone right here at the top where price is rejecting from, what's going to happen is from here, we can still get another push up, even though this on the hour, even though this is a dark cloud, okay, we're still within this flag. Now, I'm not trying to contradict what Marcus said or anything. He's absolutely right. We are expecting a move down. At the same time, we have to wait for what the candles are trying to tell us, okay? I was talking to someone, I can't remember who it was, that basically, if you look at it, these candle patterns or these candlestick patterns happen all throughout, even when they're not like near important levels of support or resistance or even trend lines. Like they happen all throughout. It doesn't matter. They're gonna print. We just said they're most significant when they print on certain levels. Right now, we're still within this flag, because even here, we can see that this. Let me get rid of this. That this candlestick pattern right here is also a dark cloud. Okay, it's also a dark cloud, but it's still stuck in this flag. And as you can see, after that dark cloud printed, we did have a down move right here, but it still stayed within this flag. So this dark cloud right here may end up doing the same thing, but we want to wait until price tells us what it wants to do. Okay. Question, Colton, go ahead, man.
Hey, okay, so that flag formation, is that going to indicate it's going bearish every time, or are you still reading price action after it forms that flag?
After it forms this flag, you still want to read price action. This is just letting you know that, hey, this is a flag. It'd be different if price was up here and price did its impulse, but then price started flagging down like this. Okay, this would be a bearish continuation flag, and then your flag will look like that. Then after that, we can definitely be sure that price is going to go to the upside after it breaks out of this flag. Okay, because this is a bullish continuation flag. You got your impulse, got your correction down here, and then more up. So right now, even though price is moving within this flag, we still have a decision to make when it comes to this. One, and this is asking you. I mean, yes, we're in a flag, but you have to pay attention to everything that's going on, your whole environment. Okay, even though price is moving within this ascending flag, would you be comfortable taking a buy right here when it's so close to this zone that it's rejected?
No.
From plenty of
Yeah,
time?
definitely not.
Okay, there you go. That's what I'm saying. When after an impulse, like I said before, it's either going to stall out and start consolidating, it's going to correct itself a little bit to the downside, or it can keep going up a little bit. Either way, it's going to create a flag. Okay, if it's a descending flag and it's coming down like I just drew out, then it has more probability to break to the upside because that's a continuation flag. It's sort of like just like a break and retest, just like we saw on GU. This one right here, we might have to wait a little bit more to see what price is telling us that it wants to do, because we're so close to this zone where it's rejected from plenty of times. So once it breaks out of this flag, it's going to break out either to the upside or to the downside. So at this point, when we're waiting, even if it breaks to the upside out of this flag, we still have this whole zone to worry about. So once it's out the flag, it could give a little break, okay? Like say we can have this candle just shoot up, right? We can have it shoot up here. At the same time, we're waiting, okay? We're not just gonna jump to a buy just because it broke out the flag, especially with it so close to this zone. Something like this, if we break out the flag here, we'd wait for that, for a buy, okay? But since we're so close to the zone where it's rejected off of plenty of times, then our bias can be somewhat of a sell, especially coming off of our fib, okay? Something for a short buy outside of this flag, something like this, like Marcus said, if we are coming out of this sell, like say this candle either just busts down or we get a little more up through here and we're still under our zero where we drew our fib at, like if this is the highest that price is going to go where it started retracing, then we can expect a buy down with our TP1 here, our TP2 here, and then we'd wait for our levels, okay? We could get a retracement to our 38, our 50, or our 61, even our 78. I don't see it coming all the way back down here. I see something maybe like that, and then coming back up, okay? Then we'll see what happens over here. But for the immediate trade, what we're waiting on is for price to break out of this flag and then to come back down to the downside. We're not looking for any buys until it breaks and retests this zone. Okay. So as far as market structure goes, man, like I said, you have to be able to identify when you're in some sort of consolidation, whether you're in an uptrend or a downtrend, when price is impulsing and it's in its corrective phase before it continues. There's plenty of signals that price will give you to let you know which phase it's in. And it's just our job to be able to identify that and then make moves off of that. So, but other than that, any other questions? Anything else you guys have? Something I missed?
No, I'm good, man. I'm good.
Cool. So this will be uploaded for you guys. If you guys want to go back and look over this session again, we'll put it in Discord and in the Telegram group, and we'll put it on our YouTube channel as well. So also, if you guys didn't get the link for the 90-day spreadsheet, one of our people threw it in the chat for you guys in the Telegram group. Let us know if you need that as well, and we'll shoot it over to you guys. Don't forget to, I guess, give both of us a shout out on some sort of social media, man. We'll be sending out friend requests and all that stuff. Like I said, we're not really big into that. We're trying to break out into that because we know it's beneficial for the future. But for the most part, that's what me and Marcus are here to do. We're just here to teach you guys the right way how to trade. Doesn't matter how many people show up. We just want to see people that are dedicated and people that, you know, they want to go for it and they know what they want. And we're here to help guide them. So other than that, man, I'm going to go ahead and close this out. I'm going to get something to eat. You guys enjoy your night. Enjoy your ride home. Be safe out there. Catch you in the morning. Yeah.